Yo, 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 what up, my boy? What's good? Shit, just chilling right now. Just chilling, figured I'll do a quick little lab test, you know what I mean? Just get a little quick reps in before my day starts. Oh, my day's already started, but you know what I mean? Get these in real quick. What's good with you? Yeah, just fucking chilling right now, my boy. Yo, what up, Krish? What up, Krish? Yeah, so I'm just gonna pretty much just go over what I kind of see, type of thing. Nothing too crazy, but just gonna try to see what I certain things. Let's see. Yeah, hell yeah, that weekend work is overtime for us traders. Yes, sir. Yeah, it's like I said, today, cause yesterday we know we was working the last 2 days, so it's like I kind of got backed up on those 2 days, so I got to try to catch up. I got to use this little bit of time to try to catch up, get a little ahead, nothing too crazy. Hold on, I'm gonna send this YouTube, let people know it. Got them ads. I got them ads pulling up on my page. Yeah, hey yo, when you guys pull up to my page, when the ad shows up, make sure you watch all of it so that way we could run it up. Alright, let's see. Yo, you're looking bullish. Yeah, bro. This is on the 4 hour right here. So what I seen was one of my buddy Jack just pointed it out. It made sense. It's like the reason why I have these highlighted right here is because I wanted to see why, like, this is how I look at a chart and I try to diagnose it, is that there's one here, there's one here, there's one here, there's three different bottoms. What made this bottom right here more important than this bottom, and then what made it more important than this bottom? Even though you might have caught in some up here, but a lot of people would have expected it to continue up. But the difference though, why didn't this one touch the top of the range? Why didn't this one even go to this previous range or something? And why didn't this, but why is this one breaking this range into this range now, possibly gonna be coming into this range? So what I'm thinking is pretty much what I'm thinking is the reason why I'm on the 4 hour right now. So what I pretty much did was I see this low, and I looking left at this area. This is the area where this wick is touching at. So what I did was I just put a wick, I put a line right at that wick right there. Took more liquidity from the far left bottom too. Yeah, and that's why I was saying too is that, okay, and I'm also trying to point out, like, I'm trying to figure out why is, if we would have taken a buy, even though you probably still would be right at either of these by now, but it's like you would be in drawdown, and the ultimate goal is to be in zero drawdown. So my goal would be, why is this one working? But yeah, and that's why I say is that I look over here to the left and I'm using this low, but then now I say, why is this low more important than this low? Why is it more important than this low, and so on and so on. So by just looking left, you see, you have a support there, you have a support here. So that support right there, and then you also have a resistance right here. And I think this is what's the most important right here, is the fact that you have this split right here, which is the indicator pretty much to let you know that this is a rejection area, and then you also have a support area. So this middle line is perfect for both of these areas, but then you also just look like that, look at perfect. It's really respecting that. So even when we did break below, this was, still respecting this line up here. So that's the reason why I'm also trying to point out, why is this area more important than any other area. So that's kind of my assumption just by looking at the chart, is this is getting lower. It broke the low of this, but it's also, like I said, an important area of the resistance and also a support. And then, this is also what I noticed. Of all three of these areas, there's either, these are all fake outs, right? You see a fake out, fake out, fake out. Why is this fake out more important than this one and this one? What I noticed was, in this fake out, there's a 3-piece, and in these fake outs, there's not a 3-piece. So when I go down to a 30-minute time frame, yo, what up, Jordy? Yo, oh yeah, for sure, bro, appreciate it. Well explained. Where you highlighted the other one highlighted. Yeah. My bad. But yeah, that's kind of my idea of why I see that important. So that's kind of how I look at the chart, is like I say, why is this more important than this one? Why is it more important? But like I said, you have to go down to different time frames. And then that's when, this is on the 4-hour. So I believe it was on the 30-minute right here is where I seen this 3-piece. So look, right here, if you guys understand the 3-piece idea, how we take the trade is that if you see this, the inside, and then the break of this low is what signaled the 3-piece, and that's the area that happened right before the push up. So this was the push up into the next range, which was also this range right here. So like I said, this is one range, and then this is another range right here. And then there's also technically a high that it touched, which is way up here. And that's the high that we actually ended up touching before we come back down. So oh shit, what word, Jordy? I appreciate that, brother. I appreciate that. That's crazy, Jordy. Yo, I appreciate that, brother. Love, bro, love. Appreciate it. Hi, Jordy. That's what's up, bro. I appreciate it. Means a lot, bro. It means a lot, bro. Kill Kenny, what up, Kill Kenny? Hey, everybody, give a shout out to my boy Kill Kenny. That's my boy Ryan. I'm gonna be explaining a few things. Those equal highs, yeah, exactly. So yeah, Ryan. So now that I know you're here, Ryan, I'll start how I do my analysis. Like, this is how I start, right? So I start fresh all day, every day. Start fresh. Then you kind of go to the monthly. I'm gonna make it quick on the monthly because it don't really matter too much. But like I said, you start from the monthly all the way down to the 5-minute. So if you look at the top up here, that's where you'll see the monthly, the weekly, the daily, the 4-hour, the hour, 30-minute, 15, 5-minute, and 1-minute. And that's where you go, you work your way down and stuff. So pretty much just a quick sum is, like I said, you'll create a range, you'll find your ranges and things like that. And then you see that we're closing above this range right here, so it lets you know we're above here, so we're pretty strong. And this being level 1, this being level 2, this getting broken right here lets you know we're on possibly a continuation. And then you pretty much just do the same thing, working your way down to the weekly, and you pretty much do the same thing with the weekly. You kind of just, put your lines at a certain area where you think the tops, and then you just find another bottom right here, kind of a bottom right here, kind of like that. But I'll do it slower on the smaller time frame. I just wanted, like I said, this is just the monthlies and the weeklies. It don't really matter right now. But yeah, so like I said, that's pretty much like how I found the range, the resistance there, and then the support there. kind of like that, you know. And then so yeah, so what I'll do is I'll start on the 4 hour. So what I'll do, this is usually how I do my lines right here, Ryan, is that but yeah, I appreciate it, bro. So like I said, look at now I'm on the 4 hour time frame. This is the idea where you get serious, right? So now I get my lines, and then I'll put it at the top right here. I'll put it solid. So as you can see, this is the reason why I use that right there, and I use this right there. So sorry guys, I'm just gonna give a quick explanation to my friend Ryan real quick. But yeah, so like I said, we have these highs right here. That's why I put the line there. You could always put a line right here at the bottom, just because it shows you a little bit, you know, it's pretty much the bottom here. But you also are cutting through these areas, so you kind of want to watch out for that. But you can also move a line a little bit closer, somewhere in the middle down here, kind of the thing. Or even something like that. You do it like that, yeah, right there. That'll be a bottom line. And then you could do another line. And the reason why I use this line is because, like I said, look, bottom here, over here, this is the bottom here. Then there's a bottom here. And then if you look underneath it, right here, it's the resistance, meaning it's underneath it, while this one right here is above it. And then you have that above it, like that. All right. But yeah, so this is the 4 hour. And so the 4 hour, so what I'll pretty much do now is I'll find my range right here. I'll find another range somewhere right here. I'll probably do it there. And the reason why I do it there is because I see this support here, I see this resistance there, I see all of this resistance here, you know, all of these close underneath, this resistance here, and then like I said, support, broke, perfect, just like that. Alright, so that's that range right there, that's that range there. And then I go to the 1 hour, and then you could also adjust it. Once you go to the 1 hour, you could probably adjust it if you need. You know, just find this area. You see how now you're kind of underneath it right here. So you could kind of adjust it. Boom, there. You kind of leave that one. That one's good. That one's good. And then right here also, obviously on the computer it's a little easier. But yeah, so that'll be for that. That'll be for that. But yeah, and like I was saying about what we're looking at right here on the 4 hour, this is on the 4 hour. What I'm kind of looking for, like I said, is that you see that this low got broken. That was where this, I believe, grabbed the liquidity. And this is what Jack showed me. Jack, I was talking to Jack earlier, and he was the one that explained it. Because as you can see, the low right here on this 4 hour is right here. And this one didn't break it. So you could have probably got faked out with that one. And then it's this one right here that broke it. And that was the one that I believe that took us to the top of the next range, which is up here. But as you could kind of see, we did close coming back underneath it. So what I mean by that is the same way there was a fake out right here, this fake out down here at the bottom line, this fake out, what it does is it closes outside of the range, which is underneath this line, and then the next one right here closes back inside of the range. So when this one closes down, the next one closes in, and that's what we consider the fake out. And where did that one happen at? It happened over here at the previous low 4 hour. So that was, we believe, was liquidity, right? So this is where I talk about the 42 idea. So on this, even on this 4 hour, notice displacement after taking out that liquidity shows buyer aggression. Yeah, for sure. Yeah. And that's where what I'm saying is that when I put this line right here, I'm using these lows right here. And what I'm saying too is that if you notice, you know, we have the respect here and we have the resistance there. So that is like the perfect line right there that shows, you know, a lot of support. It's getting respected for sure. And then that's where I was saying is why I'm looking at the chart. I kind of tell myself, what I ask myself is, why is this area more important than this area? Why is it more important than this area? Because we could have always taken a buy, but if you're not closing, then you're kind of going back into negative, you know. So the idea is to try to figure out why this area is more important than this area. So, and like I said, what I've been able to point out is that definitely these lows got tapped. And then, like I was explaining on my IG story, if you guys have seen it, you guys will notice that this is what's considered a 42 idea. So this is the second candle that's inside of the first candle, and this is the inside bar. And then it's this third candle that either needs to break the high of the first candle or break the low of the first candle. In this case, it doesn't look like it broke the high. It might have barely broken the high, but what this also signals to me though is that this did say technically a three-piece, which when this breaks above it and then comes back down, that this is what I believe is explaining to me why this is a fake out down here and it's coming back up, and this is another fake out right here to come back into the range. But the idea of the 42 is once you break this third candle high, it's this candle right here. So once you break this high, that's what signals the direction of the fake out. So once we broke this third candle high right here, after we have an inside bar right here like this, that's what signals the 42. And that's where I'm saying is so since this signals the 42, how you would find your target is usually you go down to the previous time frame. You go down to the previous time frame, which is on the 1 hour, because technically this is the 4 hour. So on the 1 hour, the previous high is usually like right here. It will technically, because this is where that 42 first candle is at. So like I'm saying is this is the first candle, that dot. So I go to the 1 hour, which is this right here. The previous high is this line right here, is boom right there where this is at. And that's where I believe we came back down for the fake out. So as you can see, this was the range that we closed above, but then this candle closes back inside of it. But now it's the idea, now the next candle is closing back outside of it again, which is this one. So I don't know if it's we're gonna wait for this next candle to open, and then it's gonna also possibly create another 42 or three-piece or something like that. It's interesting how you see the things, very educational. Oh yeah, Jordy. Hey, I appreciate it, bro. Yeah, Jordy, the thing is like with me, I don't look at the chart like it's just patterns at the end of the day, because honestly there's only two directions. There's up and down. There's only up or down. So eventually, like I said, that there's a bunch of combinations of candles that end up creating this to move like that. So how I figured what I figured out, like what I know, what I understand is this is how I figured it out, is that what I would do is I would go to, like, let's say a 4 hour time frame like this. So if we're on a 4 hour time frame, where would you want to take a trade at? Obviously you would want to take a trade here. You know, you would want to take a trade here. You would probably want to take a buy here. You would probably want to take a buy here. You want to take a buy here. You probably want to take a sell here. You want to take a, you know, a buy here. So you obviously wouldn't want to take a trade here. So pretty much, not saying this information doesn't matter, but why focus on a trade that you're not going to take in a range when you should go to the areas where you're going to take a trade at? So if you see this high up here, you would want to be in a sell up here. So what you need to do is study what makes up this combination of a bunch of candles that makes it go down. Not only just the combinations, but looking left, you got a resistance. That's one confirmation in a sense. A bunch of candles that form a certain combination usually signal down and stuff like that. So that's where I've, like I said, what I've been able to figure out is all these three pieces, like I say, a three piece or a 42, it usually happens at the bottom of a range or at the top of a range, because what I try to study was all of this. So what I would do is I would put a circle around this area, because like I said, I would want to trade up here. I would want to take a sell. So I circle it on the 4 hour. Then I go to the 1 hour, and then I just kind of look inside of that circle and see what's inside of this circle every single time before we move down. You know, what do you see? What do you know, how do you, why is this area more important than this area to take a sell, like this area right here. So like I said, the idea is to try to avoid bad trades. So what you would do is, like I said, why wouldn't you take a trade here, and why would you take it here? Not saying this one would be wrong, because eventually if you took a sell, you would be probably right, but you would also go into a little bit of drawdown. So that was my idea, try to figure out what makes up this circle and why does it come down. And then that's where I'm saying is that every single time in those areas is where I would circle. Like I said, look, the move right here is what I circled earlier. And when I go down to the 30-minute, this is the move that I always see, which is called the 3-piece. So when the 3-piece happens like this, it usually signals the move up. So that's where I'm saying is that you could almost get a good entry if you're correct. It's not just that simple, but that's just kind of, like I said, that's how I kind of look at the market. Kind of, it's like, it's just a bunch of patterns, obviously. It's like when you see things happen, like if you kind of see this right here, you'll see this all the time. And what I realized is that you guys, this is the next type of thing. This is kind of funny, but you guys won't understand yet. But you see how that right there, it looks like an eyeball? It always happens like that. Right above a range, you'll see like an eyeball type of thing like that. And then I go to the 1 hour, or let's say I go to the 4 hour, it's always inside of a fake out. So you'll see an eyeball pretty much inside of the fake out. So that's what I'm saying too, is that by looking at this 30-minute, by seeing this eyeball pretty much form right here, this is also kind of confirming to me that it's already building a fake out. So like I said, I could tell it's a fake out kind of happening just by this area up here. But then, like I said, by also knowing what Don taught us is that, look, it's a celery play also. It's a level 1, which is right here. Like I said, when we look at the top of a range, look, there's a level 1, and then there's a level 2. And then that's where I'm saying there's also the eyeball idea, which also creates the fake out. So that's what I'm saying, is that's what I notice all the time at those areas. If you keep just looking at the areas you want to take a trade, you'll notice the same things happen. And it's almost, but like I said, it's also understanding liquidity, where we're going to grab it at, things like that. So, but yeah, man, it's interesting. But yeah, appreciate that, Jordy. If you have any questions, feel free to ask, though. I'm definitely here to help. And Ryan, if you have any questions, feel free to ask, bro. Feel free to ask. So yeah, so look, this is what I see right now, guys. Look, I see this right here, boom, boom, and then that considered a fake out that would take me to this high right here. Ooh, this high, which will be here, and I'll make this a dotted line. Oh, let's see, dotted line right here. So that'll be that, and then look at, that's where I'm saying is that that's also the fake out that happened. So I'm wondering, I would stay here longer, but I need to dip. Hey, no worry, Jordy. No worry. Do your thing, bro. Do your thing. I appreciate that, though. Appreciate you. So the 3-piece happens at the top of the range or the bottom of the range, right? Correct, Ryan. That is exactly where I find it happen all the time. Not saying you won't see that. Like, let's say you will see a 3-piece. Let me erase these real quick. You'll see a 3-piece. You'll see a 3-piece right here, maybe. You might see one here. You probably might even see one here. But the difference, though, is why is this one more important than this one? Why is this one more important than this one? So that's where I'm saying, though, is that you need to understand also where we are in the market. As you can see, when you look left, this is where we're bouncing up at. So there's a good chance, there's a 3-piece that happens over here. It's gonna be a bounce. And this is where I say, though, is that out of all of these sections right here, all of these bottoms, only one of these bottoms actually had a 3-piece. So out of all 3 of these bottoms, look, there's a 3-piece right here, but there's not a 3-piece right here, and there's not a 3-piece right here. So the thing is that also would have kind of indicated to me that we're possibly going to continue down still. It's up until we see a 3-piece, it usually signals reversal. So like I'm saying, when Don says there's 3 phases to the market, Hey, let me look up that video actually. I'll show you guys. It was a good video. Don Vo clips right here. Yeah, guys, if you guys haven't subscribed to this channel yet, make sure you guys subscribe to this channel right here. Make sure you drop a like. Hey, appreciate that, Jordy. Yeah, for sure. The best opportunity for trades will happen after taking an area of liquidity, for sure. Yeah, because that'll definitely bring in the most volume. Once you take that liquidity, it's a lot of volume. All right, this is where I was saying is let me see, let me find it. He explains the different markets. He makes it quick. He explains it very well. Confidence between confidence. Don't talk about chart truth. What he's waiting for the break of the higher low. If he's sad during drawdown, how he handles it. Oh, it might be under videos then. Oh yeah, it might be right here. Discipline for beginners, important journaling trades, golden house, Spain's bottom wicks. Oh yeah, right here, the 3 different market cycles.
How do you know that would be tough today? Not because like the market moves in cycles, right? There's like a couple cycles in the markets. There's like there's a stage where like you would range, there's a stage where you would drive, and there's a stage where you would pull back, right? So typically you might range for a little bit, like in this area here, you know, whatever, and then you might push up, and then you might set to range again because you're pulling back now, and then price will make a decision on where it wants to go next, right? So in terms of like the higher time from today, the 1 and the 4, we were kind of in this range to start the day off, whereas yesterday we were like we already printed a range, but today or we already printed this, right? So usually after you have this breakout and then you have a pullback, you have another move that will happen, either a push up or push down. But today you started off here instead of here, so therefore you had to print this, and you had to print this move, and then you gotta print this, which is kind of what it's doing kind of in a way, because this could be the pull up, right? And then you can start to range and then maybe correct the whole move down, which could still be possible down on gold here. But that's why that's why we said it was gonna be a little tougher of a day today, because it was gonna take a bit longer for us to print out the moves today, right?
Yep, that's how he does it. So like I said, there's the 3 cycles of the market. That's what I've been kind of noticing. So what I'm saying though is that if there's 3 cycles of the market, what I've noticed is a 3-piece usually happens, you know, at the possible continuation area, that pump part, where this area right here might be the range, or you know, the ranging part, and then this area might be the pullback or something, because it is a pull, or however you read it. But that's also just where I say it's important to understand what part of the market we're in. Obviously that comes with time and understanding the market and stuff, but like I said, it's just important to understand like liquidity and things. I think that's why this 4-hour is important, because of the fact that once we broke these lows right here, what happened the last time we did that? We went all the way back up to here. So I'm just wondering, if we happen to break these lows, is there a chance that we at least come back up to, you know, either this high, this high, this high, or this high? So that's the, I guess, the trick of trading, is to try to figure out where we're gonna need to head. So let me try to figure something out. This is kind of what I see right now. Player, appreciate you. Player, appreciate you. Player, appreciate you. I appreciate you guys though. I appreciate you guys. Hell yeah. All right, but yeah, so look guys, this is what I see right here. Say this is 1, this is here, this is the break, and then boom. So with the break of that, we need to go here, and that's where we actually came back to. So if you notice, that is exactly where we came back to. So look, this is also what I'm could be trying to, you just also want to just kind of think of hypothetical things. You have to try to figure out, obviously there's only 2 directions. So think of a scenario that makes you go up, and then think of a scenario that makes you go down that makes sense. So like what I'm kind of possibly thinking is that if this is a top wick or something, because we already closed back into the range, if you see this white line, that's the range, and this green one closes above, which is a fake out, closes back into the range. What if this candle is just a top wick to possibly come back down? Because I did say I do see a three-piece right here, and what happens on a three-piece is that you usually need to touch the bottom of the range. So I'm just wondering if at some point we come up here to come back down, and then we possibly come back up or something like that. Just because in order to really touch these highs up here, in order to touch these real highs, you know, we actually had to go pretty low. Because if you look right here, we actually had to touch these. This is on a 4-hour time frame, but the idea is that we did have to come a lot lower to be able to reach these highs. So I'm just wondering, if not having to come this low, we just might need to break our previous low, which is here, one more time before actually trying to make that initial push before possibly coming down or something like that. But it's also important to understand what's happening in the news, what news candles we got coming up, what news folders. And also, Ryan, there's this is the website right here. It's called Forex Factory. If you notice, it says right here at the top left, it's just like that, Forex Factory. So the forexfactory.com, and this is the website. Obviously I'll send it to you later, whatever, but this is the website, that one I was telling you about, that tells us about the news and stuff, and you can learn about a lot of other things on here, different pairs and stuff. But this is the let me zoom out. This is the calendar pretty much. So right now obviously we're closed, so there's no news right now. So as you can see, it's right here actually. So let me see, today's January 13th. Let's see. Okay, so this was yesterday. Oh yeah, right here. So this was yesterday, because obviously I put yesterday's date right at the top left right here, whatever. But anyways, as you can see, these are the folders right here. So these are the folders that give us the importance of the folder that's coming out. So like these red folders don't happen every day. They're only when like important news come out. Core PPI, this is an important one. PPI is an important one because it's a red folder. As you can see, it's a red is the most extreme, yellow or green, whatever the color this is. This is just like basic, I guess. And then the orange is like the middle. It's not as important, but it's also more important than this yellow one. So yeah, that's just kind of how you it's just pretty simple like that. But yeah, and like I said, over here to the right side now, when you look over here to the right, you'll see the numbers and stuff. And then this is where you'll see the it says actual, forecast, and previous, which is pretty much, like I said, previous is what they're expecting, which is this number. And then you see forecast is what they were previous is what was previously, what was already from the last news. And then forecast is what they're expecting, and then actual is what actually came out. So like I said, you'll have one of these numbers, which is the previous before it happens, and then you'll have forecast. You just won't have actual until the news drops. So once the news comes out, boom, it puts the numbers out, and then you see it in the market and stuff like that. But yeah, so like I said, this is the little folder, and like I said, it's always something going on, but this is the name, like the little GP, these little letters right here to the side over here. Those are like the name of the pair. But what you want to look for is the USD. Like this one right here is as USD. That's what's gonna affect us. All these other ones might not affect us as much, but it's mainly USD because that's what we trade, the gold USD. But yeah, that's another thing. But yeah, so we're gonna see what happens. What I'm noticing is that this technically already finished. So what I'm gonna look for next. Oh, what up, bro? Duh, bro. I appreciate that, bro. I appreciate that. My guy. Alterize. My dude. What up? Appreciate it, bro. Much love, much love. But yeah, so like I was saying, that this is what I see down here. So look, like I say, is that when you see a 42, which is technically this one signals 3-piece, but the break of the third candle still signals the 42 idea, which is this guy. So once this breaks up, it signals fake out. But like I said, fake out means we go up to fake you out and then we come back down, which is this right here. So technically the previous low would be this 30-minute, which would be this guy right here, because this is the high, and that's exactly where we get the fake out at on the 4 hour. Like I said, we close right back into the range underneath that. All right, good. Hey, appreciate it, Israel. Have a good day, man. Appreciate it. Appreciate you stopping by, bro. Oh yeah, so like I was saying is that this is the previous high, and that's where we got the fake out at. Hey, bro. I appreciate it. My guy. That's my dude right there. Appreciate it. Hey, my guys, y'all. Man, y'all ain't gotta do that, man. Just trying to spread some knowledge. That's all. But yeah, I appreciate it, y'all. But yeah, like I said, so look, this is the previous high on the 30-minute, or I mean on the hourly. Because what I usually do is if the 42 happens on the 4 hour, I go to the previous time frame, and the previous high is this. Boom, we had the fake out. So that's done already. So that move is done. So now what I usually do is I go back to the 1 hour, and then I check this to see what's happening on this 1 hour. So now I kind of got to figure out what's happening here on this 1 hour. And then let's see. Ooh, it's kind of, nope, I don't see nothing really. So right here, it's okay. This is another 3-piece idea. So look, boom, boom, this here. So this right here, I think could be a top wick to come back down to touch these bottom ranges before anything. But that's what I see, bro. What's up, brother? Great knowledge. Yo, I appreciate it, bro. I appreciate it. Yeah, and like I said, guys, like I use these ideas of this 42 idea to understand. Like, let me explain how I come up with this 42 idea. Like I say, look, this is the first candle, and then this is the second candle. It has to close inside of the first candle, which is this guy right here. And then it's when the third candle, which is, this is a 3-piece. So when the third candle breaks above here and then comes back down like that, your entry would be this guy to target the bottom of this range right here. So it'll be the same thing on going up, is you would come down to come back up to target the top of this range now. So that's the idea of a 3-piece. That's just something real quick. But let me show you what the 42, because the 42 happens a lot, and this is what signals the fake out. So this is how I find a fake out. So it's now when the third one, usually, like I said, a 3-piece breaks the top or the bottom. But since this third one closes inside of the first one, it doesn't break the high or the low. Now it's the fourth candle. So now it's going to be the break of the third candle, which is this candle right here. So now it's the break of the third candle. Whichever direction it breaks, either high or the low, it's going to go in that direction for a fake out. So let's say it breaks the low going this way. What it's going to do is it's going to signal that a fake out is going to start happening at a certain range. And like I said, it's going to look like this, and that's the eyeball that I talk about, like when you see an eyeball, and that's the little range. But on a higher time frame, all it's going to be is just a simple fake out. It'll be like at a certain range. Like let's say this is the range right here. The fake out's going to be like this, and then boom. And then we're going to start moving our way back into the range we just came back from. And that's where I'm saying is that that's how I figured out what I've been doing, is just understanding that that's what happens every single time. So like, look at, that's where I say is the move that just happened that I took, I believe it was on the hourly. Oh yeah, it was like this guy right here. Look, this is one. This is the inside bar, because this one didn't break the high or the low. Inside bar. And then it's this third candle that didn't break the high or the low of the first candle. So it didn't go higher or low. It still stayed inside. and then now it's the break of this third candle which signals the direction, and then it broke above it, so that lets you know that's where your previous you're gonna have a fake out at. So that's what I'm saying is now on the 1 hour, what I do is I go to the 30-minute, and then this is the area where that 42 is happening. You go to the previous high, so the previous high from here, the next one is this guy right here, and that's where I say I put the line at. I put the dotted line right there. Then I go back to the 4 hour. That's where I'm saying that's exactly where I knew once this green candle closed above here, it's gonna have to close back inside of this range right here down here, because that's what would be considered a fake out. So that's what I'm saying is that's how I'm able to find that exact point, is because of just those candle combinations that keep happening. But yeah, that's the idea of like what I kind of do with the 42. And this is where I'm saying though is that this one right here is the same one that's just happening. So now what I have to figure out now is a 3-piece up here to come back down to this bottom of the range. That's where I'm thinking is that what I've noticed is that when you touch the bottom of a range, you have to touch the top of the range, and then you come to the bottom, you have to touch the top. And that's where I'm saying is that we've already touched the bottom, now we touch the top. So what's gonna probably need to happen though is that we did have a 3-piece at this bottom, which signals we need to go into the next range. So I'm just wondering also is that if we could be just grabbing possibly more liquidity down here to make our way back up like that. Because I don't know if this will be enough power to make it all the way up just in one straight move. So what you might have to do is you might have to go down to grab a little bit of liquidity down here so we could make our way up. But yeah, man, if you guys have any questions, feel free to ask, man. I appreciate you guys though, if you guys are still here. Like I said, I was just getting a little bit of testing in and just a little bit of I like explaining it, because when I explain it, I could tell if I'm understanding it myself, because the better I explain it, the more I understand it. So it actually helps me out being able to explain it, so it definitely helps. That's why it's actually good is to talk it out, you know, even if you're not streaming or anything. Just be like, you need to be able to hear yourself, because you can kind of tell when yourself is like, you know, you can tell when you're lying to yourself, or when you're like not serious, or, you know, you can just tell, you know yourself the best. So use that as a tool. But yeah, so all right, but yeah, this is, and like, okay, look, this is a fake out right here. I'm wondering, was there something that happened up here? Okay, look at this right here. And this is where I want to show you too. This is something that it gives me the same thing. Look, there's one here, there's a second one inside of the first one, and then the third one is the one that got broken, the low. Look at it, broke that low right here, boom, right? So you go to the previous 15, this is the start of that piece. So you go to the previous 15, and the low is right here, boom. So you go to that low, then you go back up. Look at where the fake out happened at. The fake out happened exactly at that previous low. And then what happened, that's where I'm saying is that's how I'm able to find the range, is that it ends up being the range of that like the 3-piece and the previous low becomes the range. And that's what I'm saying is, look, that's how you find that fake out. So if you're able to find that fake out, like, see, when we're in the trade would have been from right here at the break of this low. Technically, if you know, if everything lined up perfectly, you would have wanted to take that trade. Your target would have been at least this area right here, because It's only 6 pips, but that's the idea of being able to understand that that's what needs to be tapped. So obviously, like this is a small one, but the idea is that some of the ranges are a lot bigger. You know, some of the ranges you have to tap. Like let's say right here on a higher time frame, the next range is not to, you know, down here or something. So it would be a lot bigger. So you just need more cleaner traffic, but that's just the idea. Like I said, it happens all the time. What I've been noticing is that, like I said, this high needs to be tapped. Now this high needs to be tapped. Now on a smaller time frame, this high needs to be tapped. Now this high needs to be tapped, and it's just like a game kind of. It's kind of weird. It goes one way this way, and then it goes back on the time frames. Like it goes 5 minute, 15, 30, hour, 4, daily, weekly, monthly, and then backwards. Monthly, weekly, daily, 4 hour, and it just goes back this way, then back this way, back this way, back this way. But yeah, man, that's the idea. If you guys have any questions or anything like that, feel free to ask. I'm hoping I'm still on stream and it hasn't shut off yet, because I know it shuts off once in a while. But yeah, appreciate it. If you guys have any questions, feel free to ask. Yeah, I'm not sure how long I've been on stream yet, but I'll probably be on just for a little bit, probably like 30 minutes, 30 more minutes or something. Just because there's no movement or nothing. I'm already kind of, but I guess I should try to find these levels. So what I'm seeing here, look, a 3-piece here, boom, boom, and we broke that. So what might need to happen is we might need to tap into this range up here, which will probably be down here somewhere. So if we tap here, it'll be for liquidity, probably to come down. But yeah, man, appreciate you guys for watching. If you guys haven't hit that like and subscribe, hit that like and subscribe for me. I really appreciate it. Yeah, and also if you guys haven't subscribed to this Don Vo channel, this Don Vo got all those clips. I'm telling you, this is where I learned a lot of my stuff from. Everything that on these clips, I learned from them. And then, like I said, while I'm doing something, I go back to these videos because I know I've watched all these videos already, so I already know what's on this channel. So every time I have like an idea of like, oh, a market structure, or like how I showed the video earlier, I just revert back to these videos. It's like, bro got all the freaking answers. You just have to listen. That's it. But like I said, you have to listen over and over and over. You gotta repeat it. You can't just listen once. You gotta repeat it. But yeah, and like I said, it happens on all time frames also. So don't, like I said, okay, and Ryan, I know this was a question you had before. Okay, so look at, this is the daily, right? So look at, this is a daily. So all of this information right here is damn near since November 16th all the way to current. So this is November 16th. Now if I go down to let's say hourly from the daily, this is how many candles are in those since November 15 on the hourly now. So all of these hourly candles make up that daily structure. So we still have the same levels. Look at this top level. We still have the same level up here, same levels here, same levels here on all the time frames. But as you can see, like I said, look on the daily. This is the daily now. There's only 3 candles right here at the bottom. Oh, damn. And look at, guys. Damn, look at this. This is what I just noticed. On the daily, there's a 3-piece right here. This 3-piece signals how much we're going to need to go up. So if that's the case, we are going to need to hit this top of the range, I believe. We might need to tap up here, these all-time highs. Wow, did I just see that right now? That's crazy. Like I said, when you see a 3-piece happen, it says you need to touch the next top range, and this is the range from here down to here. So I'm gonna make this box. Look, this is the range. Boom, from there to there. So look, boom, here to there. That's the whole range right there. This guy. So if we're in this range, we already tapped this range, so we came back. So what happened, look, we already tapped the top of the range. We broke above the top of the range over here, I guess. We did tap that top range. Came back down into this range. Now I'm wondering, it's either we're going to continue down or we're going to come back up. So we'll have to see. That's crazy. I never even noticed that. That's why it's important to check all time frames, because you will see something that will give you an answer. But yeah, and like I said, the 15-minute time frame, as you can see too, you know, this is the 1 hour candle. Okay, this is a good way of explaining it, Ryan. Look, this is the 1 hour candle, right? So this is a bullish candle. So what this will make up is 4 15-minute candles. So you could probably see one like this, an opening like this, boom, here. Don Vo does this. I'm gonna try my best to try to do it like Don Vo does. Okay, come down here, that's one, something like that, you know. And then we go like, let's see, another body right here, boom, boom. And then this one is the one that goes like that, boom, boom. And then we have another one like this that will probably wick to the top of that range. And then you have one that closes, boom, be right here like this. Yeah, go like this. Yeah, they go like this, boom, boom. Okay, we have to go right here. Oh, so I need to make this one smaller. So we'll go from here to there, boom, boom, like that. And then this one will go from there to there, like that, whatever. And then this will be the fourth one, which will touch the top of there, which would be that. And then it will also close right there, boom, right there. All right. So look, for instance, this is the middle right here. Here, let me move this over. So this is the 1 hour, and then this is the 15-minute. So like I say, is that it makes up, it takes let me put this right here. It takes 4 candles, 4 15-minute candles to create 1 hourly candle. So that's what it means also, like even the daily. Let's just switch these numbers from a different. This will be the daily and this would be the 4 hour. It might take actually 6 candles to make up the 4 hour. So the candles just get larger when you're in a higher time frame. Not so much larger technically, because like I said, let's go on the daily, because you'll still see a small candle right here. But technically they mean more, because these candles are still, because like if you look at this little candle right here, this candle is really small. So when this candle is really small, technically it's small, but if you like measure it, the measurements of this candle, let me see, from the bottom of there to the top, it's still 140 pips. So for that one is only 140 pips, but all the way up here you're looking at 900 pips, 1,000 pips type of thing, you know. So it is technically bigger because of the ranges. Like I said, this little candle is a lot of movement, but on the 5 minute, if you were to check that same amount of movement on the 5 minute, a little baby candle like that, you know, it's still a small candle because they're all the same size once, you know. But like, let's say this little small candle, but if you measure it from the bottom to the top, it's only 12 pips, you know. So it only being 12 pips means it's just smaller, because like I said, the higher the time frame, yeah, the bigger it is technically. Yeah, it makes sense. And oh yeah, but yeah, like I was saying about the time frame, is that's how you pretty much identify the target. So, and also the same thing with the 4 hour. Now let's move this to the 4 hour, which would this would be the, oh yeah, this will still be the 1 hour. This would be the 1 hour right here, and then this would be the 4 hour. This would be the 4 hour candle now. So as you can see, this would be the 1 hour, and this will be the 4 hour. So pretty much now it takes 4 1 hour candles to make up this one 4 hour candle. You know what I mean? So now, and then, like I said, the same thing with the 5 minute. It would take, let's say, the 5 minute. This would be 5 minute candles. This would be the 15. But if this is the 5 minute, then that means we have to get rid of these, because 3 5 minutes equal 115. So 3 5 minutes equal 115. So it's the same thing. So like I said, it's all just like I said, look at the time. Right now we're at 12:06. So 12:06 is just 1 minute past a 5 minute candle. So you know, one 5 minute candle has only closed in the last hour since 12 o'clock, because it's 12:06, right? But there's also, like I said, it goes down to the minute. So it's also the same thing with the minute and stuff too. But yeah, that's the idea. So like I said, it's the same thing on all time frames. It's just they all just mean a little bit different, you know. So one of these candles has, let's say, 5 minute, boom, or actually, yeah, like that. There's a lot of candles in there. Or actually like this, look right here. We'll move that like that, and then you go to the 1 hour. That all of those candles, all of these candles right here are all inside of this just one little candle right here. Boom. All make up that. So that's the idea. So but that's why it's important to use all your time frames, so that way you could kind of see what they all mean, you know. So yeah, and like I said, understand too, you're on your phone, so it's a little bit harder, but it's always going to be easier once you get the computer and the mouse, because like I said, what I'm doing right now, I'm going, I'm zooming back and forth, going to the 5, going to the 15, going to the 5, and it's real easy and stuff. So it's easy like that. So it will get easier though. But I appreciate you guys. Yeah, if you guys have any questions, feel free to ask. I guess Bitcoin's open. I could check out Bitcoin right now. Let's check out some Bitcoin, because that's the only thing moving. See if we could find a little quick trade or something. Who knows? See what we can do. Let's see what we can do. I need BTC. Oh, it's closed on futures. Yeah, I'm just gonna yeah, I'm gonna just check out Bitcoin real quick. Just see what it's about. Just so, like I say, I see if I can get a trade or something. Damn. How come I can't find it? The captain. What up, brother? Witty bitty with the streamy. What's good, boo? Chilling, Captain. Appreciate you for stopping by. Appreciate it, Captain. For sure, for sure. Yeah, just going through a few charting. I just was going through a little few ideas, and I'm gonna look at Bitcoin right now because it's the only thing moving. So I was just gonna try to take a Bitcoin trade or something, see what I could do. I'm trying to find the one I trade on though, which is on KuCoin because that's where I have it on my app. I'm having trouble finding it. And it's a favorite, I thought. So, or unless I took it off. I might have took it off. I don't know. Let's see. But yeah, how are you, Captain? Everything good? Everything good. Everything good. Can't wait till tomorrow, man. Ready to get this trading going. Ready to get this trading. I'll probably stream tomorrow too for Asian session because you know Wix is private and Dawn's off, so nobody will be streaming. So I'll probably try to stream. Ooh, yeah. Yeah, just to get these extra reps in, Captain, you know, because, you know, the only way to get better is just to keep doing the reps. Fluidity. I took a sell on Bitcoin earlier. Beast. I know you took it. Man, bro, having an amazing weekend, not gonna lie. What's been happening? Been good, bro. Had a good week also with trading with DVS. You know, had a good weekend. Ready, excited for this new week. But yeah, I'll be probably streaming tomorrow for Asian session, and then, you know, see if we could get a trade, and then maybe even London. But I know Janus is streaming London, so I'll probably show up for Janus's tomorrow. So I'll be streaming. Yeah, I'm gonna be trading all day tomorrow. Kind of excited. But yeah, let me find this dang KuCoin one right here. Nope, that's not the one. Dang, they were hiding it from me, aren't they? And what is Tether? I just gotta look up Tether. USD Tether. There you go, right here. Duh. Alrighty, yeah, let's see. Ooh, let's see. Captain. Or no, Fluidity. You took a sell. At what price did you take a sell at Bitcoin? Ooh, hey, I like to paper trade on here too if I can. Paper trading. It looks like I could paper trade, I guess. I want to see if I could paper trade. Sell. Oh, it got in. Yeah. All right. Yeah, we could paper trade. So I'm gonna try to paper trade to see if we could get some kind of trade in. I just pushed it to see if it worked, but it looks like it's working. So, all right, close. All right, that's paper trade. All right, let's see. Let me get some new lines. So let me show you how I would do it. So I'm on the 1 hour right now, right? So I have a range. There is a range up here. And there's a range down here, and there's also a range right here, because as you can see, we have this resistance, we have this support, resistance. So it looks like a perfect box here, and it looks like a perfect box here. This one is bread and butter right here. This one's nice and easy to identify. So once you identify that, you're kind of in your range now. And then if you do notice, it's kind of hard on the computer, but there's a wick all the way down here. So that means that was the bottom of that range previously. So you could probably even put a line right there, knowing we might need to tap that if we want to continue up. But also looking left, it also respects all these and stuff. So it makes sense of why. Probably around 43.5. Nice, bro. Nice. Yes, sir. All right, so look at, so now we're in this kind of range right now. So what I would suggest is that this is range 1 and this is range 2, meaning, and also vice versa, this is range 1, this is range 2. So if you break from range 1 into range 2, this is where the fake outs happen at, from range 1 into range 2 to come back into range 1. And vice versa. Let's say The reason why is that if you're inside of this box, whereas let's say you haven't even got here yet, which is like, let's say this is the trade right here, like you're only in this, sorry, you're only in this little, hopefully you guys can see it, but you're only in this little box so far. So if you're only in that little box, then that's range 1 for now, you know. So if you're breaking into range 2 down here, there's a reason why. I mean, it did wick all the way down, but like I said, it created another range right here. So when you understand the range 1 and range 2, like I said, if you're starting here, this is range 1, and then into range 2 is where you're going to find a fake out to come back into range 1 usually, and also vice versa. Now that, and the reason why this is range 1 now is because if we want to continue up, it will be against the trend because we're already coming down. We're already moving our way down. So if you're already moving your way down, you're going against the trend. So number 1 into number 2, that's against the trend right here. So that's what I'm saying is that, and we're already out of this. So like I said, this is pretty much done with that. So it's yeah, so now that we're here, we're currently here. So this is not a trend line. This is just to show that we're in a downtrend pretty much. So if we're in a downtrend, this is level 1 into level 2. So if we come up into here, there's a good chance that we could always come back into level 1. It's up until we break level 2 up here is what signals the continuation. So we have to break level 1 and level 2 to be confirmed that we're going to start moving back this way, because that'll go against the trend. But like I said, when you're a continuation, you only got to break level 1. So if you break level 1 right here, you'll be continuing. So that's already why. But I mean, if you're coming, because technically this is like this also, because if we came from level 1 up here, now we're in level 2. So in order for us to continue, we would have to go against this. But now if we want a continuation, we're already in level 2. So this means a continuation would be this. Boom, boom. So you only have to break this level to continuation down here, where if you break the level up here, you have to break the level you're in and then also the level above it to continue up. So that's just where I say explain like the level 1 and level 2 idea. So like I said, is that if that's the case, we're in level 2. So you might want to look for sells, which is Fluidity was correct. My guy Fluidity, he was correct. He was saying he took a sell from around 43 area, which is around here, which is definitely good because like I said, we're already in level 2 down here. So you would rather look for sells than to take buys right now, because you don't want to take a buy from down here because it could just continue now. So if you were to take a buy, your best bet to take a buy would be waiting till you break up here, because this would be most likely a continuation after that. This one you could always fake out and then come back down. So that's where I say is you don't want to take a buy here. Fluidity was correct taking a sell, because like I said, we're already in a downtrend. We're from level 1 into level 2. So you're looking for sells. You want to take sells at the top of the range down to the bottom. You don't want to be taking a sell. We're right here in the middle now. So like I said, if I were to take a sell, I only have this little bit of space down here, where Fluidity, when he took his sell, he had all of the way down. Where me, if I take it now, it would be from here down here. So where I would be looking for a trade in this case is, let's say I'm late to the party and Fluidity's already in the trade. What I'm going to probably do is wait for some kind of pullback. So what I would probably want to do is wait for a possible top wick. Maybe, you know, might be a quick top wick and then come down. That's where you would want to take your trade at, is try to get in at as high as possible. You're not going to get in the best trade because we're already too late. So if we want to capitalize on trying to capture this bottom of this range down here, our best bet is to take some kind of possible maybe fake out into range up here and then back down, or maybe a continuation once you break from here down there like that. Because if you break down here, if you break the bottom line like that, there's a good chance that you're just going to continue like this. You're just going to continue down. So if you continue down after that, that's where I'm saying is this is the move you would want down right here. The break of this guy pretty much coming down to this bottom zone. So if that's the case, that's what you would have to be waiting for. So like I said, if you're already in a sell, you're winning. You're just waiting for this bottom of the range to get tapped. If you're not in a sell, what you're going to probably need to do is wait for some kind of liquidity, because like I said, if we're looking to take a sell, we need to come up first and then take it, you know. So that's the only way we would take a sell. You wouldn't want to force a sell. So that's why it's important to understand where you are in the market, what time you got on the charts. You know, did the play already kind of happen? Are you know, late to it and stuff? I got the same thing marked up, no cap. Hey, fluidity. That's why I like trading with you, bro, because me and you on the same page all the time. You always got the same levels. You take them massive trades, though, bro. You be taking the tops of the ranges to the bottom of the ranges. So that's respect, bro. Respect. But yeah, look at let's see if I can find something. I do want to take a little quick trade. We might even take a little range trade or something. Let's get down to this 5-minute type of thing. So we seen this. Yeah, look. Let's see this. Boom here, boom here, boom here. That broke. So it would need to go to the previous low. So the previous low will be the 5, which will be here. And that's exactly what got tapped. Boom, that got tapped. And I'm gonna show you where it got tapped. Oops. So as you can see, like I was saying, is this is the trade right here. Boom. This is the low of that range, right? So look, the bottom of this third candle got broken. So now you go to the previous low, which was this, and then you look at where the fake out happened at. Let's see, is it that one or is it this one? That's exactly what got tapped. Look, boom, perfectly, boom, right there. And then another 42 right here, idea to come up. So what I see happening is this is, okay, we're going to probably come up for a little bit. My idea is I'm going to try to take some kind of sell or something, but it's looking like this broke first. So what this signals is a possible fake out, but this means it's going to come down now. But how low? I don't know how low that is. Let's see. That's only 1%. So let me see. I'm going to take a sell, and I'm going to do this at 100 lots. Let's just say forget it. Let's do it. 100 lots. Let's eat, bro. We're time to eat right now. It's going to be small because it's not going to go that much lower, I don't believe. So let's see. Here, be here. Here, so it'll be the 1 minute will be there. Oh, wondering if we could possibly even come up to here, because look, that's saying that and that's saying that. So let's see. Okay, so actually we might need, actually, you know what, damn, that's actually, that's not gonna work. That's not gonna work because I'm seeing this top right here needing to get tapped. So if this top, because the way I'm looking at it now is that, and I'm just testing things out. I'm just practicing. I'm not taking no real trade. This is just paper trading. I just want to see the money go up or go down. That's all. But like I said, so where I'm getting this idea from is, look, I see this right here being a 42. So if this is a 42, the high broke right here. So what you do is you go to the previous time frame, and the previous time frame high is showing me that it needs to come possibly up to these levels. Damn, so the first one was right then. But no, that's only to come down, I think, to go back up. Watch another one. That's gonna come up now. Watch, it's gonna come up. It's most likely going to need to tap this top of this range. If it taps this top of the range, then that's where I'm saying it's going to need to tap this top of this range over here before we continue down. So what I'm noticing is what I should have done is possibly, instead of taking a sell, like I said, right here at this point, even though I believe at some point it's going to need a tap down here, what I should have did, like I said, is wait for liquidity to get grabbed, which is most likely going to be up at these levels. And this is where you're going to see a fake out at. You're going to see a fake out probably like this outside of the range and then back into the range. And then when this candle closes, this is where you would want to take your sell at. Once this candle closes, you hit your sell button, boom, at the close. And that's what the fake out that will most likely bring you back down to the bottom of this range where we need to tap at. So that's what I'm saying is that it's like, even if I would have left this position open, I just didn't want it being right here negative. But the idea is that at some point, even if it comes up here, most likely it's gonna need a tap down here because of that. But we'll see, we'll see. So that's where I'm thinking though, is like I said, it's only gonna tap up here though for liquidity, so we can come down here to tap these lows down here. So that's where I'm saying too, is that this right here, this is why it's important to try to understand what's gonna happen. When this high gets broken, it signals 42, and when the 42 gets hit, it needs to tap the previous high. The previous high is right here, and look at, that's where exactly where we're heading now. Look at, obviously I'm using 200 lots. It's obviously something I would never do, but the thing is look right here. This is the trade we're in. Look at that. It's up 9,000. Fucking spending them racks right now. But that's where I'm saying, guys, I'm not guessing. It's literally just being able to understand it. I mean, I probably would have closed by now if that was real money. But like I said, we're going to check to see right here. So I'm already in the trade at this point. So we'll get in here. My target is going to be this dotted line right here. And then my stop loss will be the bottom of this range right here. So it will be the bottom of here will be my stop loss, meaning if it comes down to here, that's where I'm going to lose my money and I'm going to close out. But this is where my take profit is going to be. Look, I'm going to add another position because this is going to be a bottom wick. I'm going to add another position right here. And this is where I'm saying is that I already understand that it needs to tap these highs. So any bottom wick could be where we add an additional position at. That's just my idea for that too. So but yeah, like I said, so up here will be my take profit. So this will be where I'll be closing out to make the money at. So if we could hit this top line, I'll be closing out the whole trade pretty much. So like I said, this is just play money. I'm not really taking a trade or anything like that. It's just the idea of trying to just trying to read price action. And I'm on the 5 minute right now. Oh, actually no, this is the 1 minute. So the thing is with the 1 minute is that I'm just using the 1 minute so we can have a lot of faster price action. Because obviously if you're waiting for hourly candles, I'm gonna do another buy once it flips green. If it doesn't flip green, I'll probably wait. I'm gonna wait for this next candle to close, because look at, this is what's gonna open up is another 42 idea. Okay, so look, there it goes. I should have just did it right then and there. But look, I'm gonna wait for this candle to form. Look, this is going to either create a 3-piece or it's going to create a 42. So at the break of this green candle is going to be the direction the fake out's going to happen. So now that candle is about to close right now, it looks like it did just close. The break of this box is the direction the fake out is going to be. I'm almost hoping it breaks down here, because that's going to signal more likely that we're going to come down so we could go up again. So if that's the case, like, okay, look, here we go. I'm gonna buy another, take another buy right here, because this is where I would add a position, because this is most likely gonna be the fake out now. So this is gonna start. That's what I want. I want it to go down because a fake out down signals that we need to go up. So if we're faking down, that's just grabbing liquidity so we can continue up again. So that's what I believe is gonna end up happening. We'll see how that goes, but oh man, I just deleted it all. Oh, actually, I learned this one from Don. Go back. Boom, perfect. All right, so look. All right, so look. I think it's gonna start moving up again. We'll see right here. But this is how I read price action. I do this and I'm just like reading candles. It opens up, okay, if it does this, it's gonna do this. It does this, it's gonna do this. It does this. So that's where I say, and I'm on the 1 minute. So this is just so we could try to like trade the range in a sense, just to understand where we need to trade. But like I said, I know. So this is also what I'm gonna practice. Once we get to this dotted line, this is where I'm gonna close the trade at, and then this is where I'm going to take a sell at, and I'm gonna see what happens to there. That would be my next idea, because the thing is it's telling me fake out up here. So we're gonna see a fake out, and the fake out is where we're gonna start seeing the move back down. So look, a bottom wick again, and I'm gonna take another buy. I should have taken it at that bottom earlier, but every bottom wick is possibly an area, because I understand that this needs to be tapped. So if that's the case, and every time I'm right, boom, it just makes me, okay, that's where I should add a bottom wick. I should add a bottom wick there, just so I could add to winning trades. The thing is I'm going to try to make it so we add to winning trades, compared to, obviously we have pineapples to save us in case something happens, but you know, imagine being able to trade and just add to winning positions already. Like I said, I see that top needing to be tapped, so it's going to need to just keep going up. But this all just comes from understanding the 42. I'm not, like I said, I'm not doing anything different. I got charged my computer for a second. So let's see. It's another bottom wick. Let's take another buy, another 100. We got 600 contracts on this one. This is just for fun. This is just demo money. So even if I'm wrong, but like I said, I would have closed a long time ago, to be honest. But we're just, like I said, if this top gets tapped, then my idea of what I'm saying is correct. And then if this top gets tapped, then that means my next idea could possibly be correct. So what I'm going to try to do is take a sell once a candle closes above this line right here. It closes above it. I'm going to take a sell instantly, and then I'm going to see it possibly come back down to this range down here or something like that. And then I'm going to start reading the candles and see what we'll start doing like that. So like I said, that's just the idea. I'm just going to try to see if, see what happens. Could be wrong also, but I mean, like I said, we'll figure it out right now in today's episode. But yeah, this is, like I said, this is what you have to do over and over. Take a trade, see what happens, then ask yourself, why was it right? Why was it wrong? Do this, do this. It's always just back and forth. It's repetition over and over. And that's what I'm saying is I've looked at these charts for so long, so many hours, that I see it a little bit differently. But you can see it differently too. It's just eventually you have to stare at the chart. Like, it's just the amount of hours you put looking at the chart. It's going to be important. If we see another bottom wick, I'll do another contract. Oh, there it goes. Yeah, I'm up 7. Look at this. Bands to make them dance. Bands, but that's obviously demo. It's easy to do it on demo, but that's what I'm saying is just learn how to read the chart. This could be reality. It's going to be reality one of these days for me, but like I said, it's just a matter of time. Look, I'm gonna close once a candle closes. Once it hits up here, I'm gonna close. But then once a candle closes right here, I'm gonna take a sell. And once I take that sell, that's what I'm going to excuse me. That's what I'm gonna try to do. Oh, here we go. Here we go. Look. All right, look. Let's see. Let's see. Let's see. Come on, push a little bit more. I needed to just tap this line right here. Pretty much right there. I believe it's gonna tap the white line, but we'll see. And the reason why, like I say, is that I take these trades, it gives me the idea of the 42, right? So look, this is the 42 idea. There's one candle here, or let me clear some of this stuff up. Look, 1, 2, and 3, and it's the break of the third candle, which is up. And then I go to the 1 minute, which is the previous time frame, and the previous high from where we were taking this area at. This is the area. The previous high is right here. Boom. It's the first red candle, not the green candle, because there's always a resistance there, but that's the top of the range like that. It's almost like it's always the first red candle right there. Boom. And that's where I say is the target. Boom. And look at, this is the target. That, damn. Imagine, yo. Imagine just reading price action like that. That's how easy it is. It's not easy, but when you understand what you're looking at, look at that. And look at the price on it. There it goes. Boom. I hit it. Close. Damn, that thing hit massive. That was like 30 racks. All right. So look, so now we're done with that one, right? Look, once this closes, if it closes above it, I'm taking a sell. Look at this. Boom. Oh, nope. It didn't close above. Didn't close above. It wicked above. But I mean, it could, that's all we needed though. Like I said, it's all you need. Look at that. Perfect. Exactly the wick. Boom. That was it. So we touched it perfectly. So, but the thing is my idea is not done until a candle closes above it. So when that candle closes above it, the next one is going to signal a possible fake out. Go crazy. Wow. You feel me, Ryan? Yee. That's what I'm talking about, bro. It's just a matter of time, bro. Repetition, repetition. Repetition, repetition. That's easy. Let's go. But like I said, is that now that we close up here, the next one is what I'm thinking. Okay, look it. Let's see. If it closes, sell. Boom. Sell now. Boom. I took a sell now. Let's see. Let's see. The idea would be that we come straight down now. So if that's the case, we're gonna come straight down. Let's see. Because like I said, it needs to close above. Once it closes above, that's gonna be the fake out. So look, boom. We're already up. We're already up a little bit, but it always could turn back around because they don't have no top wick. But we're gonna see right now. So now the idea would be that we're gonna take this target probably back down to these lows over here. So if we take it back down to these lows over here, that's where I'm thinking, look at, now we're taking it short. So we're taking it short now. So now we're gonna go down here. I need to try to figure out how low we're gonna go, but I mean, what if we start making our way down here now? So we're gonna try to see. There it goes. It's starting to move now. Let's see. I'm gonna go to the and where I would put my stop loss is where we would get out of the trade. Is you looking left, there's the high here, and then there's a high right here. So that's where we would take our trade at. Boom. That's where we put our stop loss at, because most likely if it breaks above that, then it's gonna continue up. So that's where I say that's how you decide where you put your stop loss. I mean, you could always even go up here because that's even more, but that's the idea, is to be able to find it. And look at, guys, look at what's happening right after that. Look at what I said right after, and look at, now it's up again. Look at this one. Look, this one's up 5 bands. Go crazy, my boy. Bro, that's why I say is like, you gotta fall in love with trading, man. I'm doing this for fun. This is on a demo account and I'm still having fun. Like, I understand it has no real emotions, but it's still like the reps. You need the reps. And like I said, it makes it so much better when you call it. So look, I'm gonna take another sell because this is gonna be a top wick. Boom, top wick. Could have even maybe waited a second. Oh wow. Once this candle closes, I'm gonna take another sell. This is where I would add a position at. So look, 17 seconds. Cause look at this signaled 42 going up. So the breakout above here signals fake out. So look, right now at 5, it's gonna close. The next one's gonna possibly come down. That's the idea. So sell here, boom, another one. So let's see if it goes down again. Obviously I wouldn't be taking this many positions, but this is just the idea that I kind of have about. But we did close back above, but like I said, we're gonna see what this candle does. Like I said, a fake out up means we're gonna go down. So if we're going up to come down, I mean, that was just to grab liquidity. So let's see what happens. And like I said, I could have been wrong too, because like I said, this hasn't closed yet. So let's see if maybe this next one closes here. Let's see if this one closes, and then if it's the next candle that does it. Because this is why too I do these reps, so I could see, okay, this was wrong. Now I'm gonna do it on this, and okay, this was right, type of thing. So yeah, that closed above, still respecting it. So I'm wondering, okay, what could happen? Still got 2 minutes, so this could still move around. We're gonna see right now. Ooh, let's see. So this is also the thing too, is that, you know, if we would have taken this buy, it would have been the end of our trading anyways. You know, we wouldn't have kept trading. But like I said, this is all part of it. This is all part of the process of trying to figure out what works and what doesn't. You gotta go through it 100 times, 500 times. And this 42 idea was on this 5 minute. So I'm wondering if it's the 5 minute that needs to close, and then we're gonna come down. I wonder if these could still be bottom wicks or something like that. I mean, these could be top wicks, or if this was this a bottom wick to continue like that. See, look, now I'm down 7,000. So this trade right now is down 7. So that other one hit. Oh look, now I'm down 11. That's crazy. It goes against you quick. Ooh, let's see. All right, let's do it at the top of the range. Let's see what happens, because obviously it's a demo. You could risk it. You definitely don't want to move your stop losses in the middle of a trade. But dang, just imagine too though, look at our first trade. If we would have just kept it open, that's what we would have been benefiting off of still. So that's also a thing now you keep in mind. When you close your trade, you should have closed it and then possibly brought your stop losses to break even or something like that. So that way you could still capture this extra little bit of juice that came out of this. You know what? I'm wondering if it needs to tap all the way up here still. Like if it does that, let's see. Okay, this 5 minutes gonna close. Let's see. Let's see. Take another sell here. Let's see if it's the 5 minute. Oh nope, still going. See, but this is why I say too. It's yeah, this could still keep going up. Damn. Yeah, I kind of see it still going up. Damn it, and it's all I find out that I'm using real money and I'm blowing it. Let's see. So my idea was that one of these candles was supposed to be a fake out. So I was either thinking it was the 1 minute section, which was this area. Once we closed over here, I thought right after we were gonna come straight down. But then, like I said, now I waited for the 5 minute to close, and I'm wondering if this would be the one that would be the fake out back at least into the range. And then if we come back into the range, that's where I think we could at least touch the bottom of the range down here. But this is why I say it's important when you do a test. Like I said, my initial entry was on the 1 minute. So what I'm going to do now, let's say this 5 minute comes down and it ends up being the 5 minute, then I'm going to use that information into the next situation and tell myself, okay, so when you get into the trade, you go to the 1 minute, you find your target, you want to wait till that actual 5 minute closes, not the 1 minute or whatnot, you know. So it's just, like I said, it's just repetitions, finding out what works and what doesn't, things like that. Yeah, I appreciate you guys for watching still. If you guys are still watching, appreciate it. Oh, look at that guy. Okay, he's starting to move. He's starting to move. All right. Oh, now we're back in the profits. There we go. Look at that. Back into the 2000s. It's just play money though, by the way. Look at, there it goes. Okay, so look, there goes the fake out. So that's the fake out we were looking for. Obviously, that's what we were looking for. Look, now we're up 20,000. We're up 20 bands now. Boom, just like that, it flipped. So that's where I'm saying, guys, though, is like I would obviously close right now. Boom. But that's the idea. I mean, obviously you could still get in and don't matter, but it's just the idea of understanding that this needs to be this is a fake out. Back in the profits. Let's go. Yes, sir. Damn. Let's go. But yeah, that's where I'm saying though is that, so the ultimate entry though, like I said, my entry was right here at this dotted line. So I'm still obviously in the profits a little bit, but the idea would have been better if we took it from way up here. So like I said, when I initially took the first trade, I took it on the close of the 1 minute. Once it was outside of this range, I did it on the 1 minute. for future references, it might be better to wait till that 5-minute closes, because the idea of the 42 entry was on the 5-minute to begin with. So this 42 entry that gave us the idea that to go up was on the 5-minute. So when I got into the entry was on the 1-minute. So I think that could have been a little bit of confusion right there, where I used the 1-minute as my entry instead of using it as waiting for the 5-minute to close. But like I said, now I have this as information, and look at the way this closes. Like I was saying, is like the way this closes back into the range right here. The range was the dotted line that we were waiting for to get tapped. So this being a top wick, this is where we're most likely going to see another possible fake out. Look, another one here. Wherever this third candle breaks at, either the high or the low, it's going to, not yet, but we're going to have to wait till this next candle opens. And if it, most likely, my guess is going to break up. If it breaks up, then that's going to signal another fake out right here at this red candle to come back down. So where we would take another possible entry would be at the break of this candle right here at the high right here. So watch, most likely that's what I'm thinking is going to happen. The next candle is going to break the high. Look at right here, it's going to break the high. It's going to hit right here, and then it's going to start coming like that. If it breaks the low right here, then it's going to signal that we're going to come up like this. But we're going to see right now. My guess is still going to, okay, it did down. Okay, so that's saying that we're going to need to go back up now. So yeah, it's whichever way the third candle gets broken first. So look, boom. Damn, that got broke. That was it. So what that says though is that now this next one's gonna most likely need to come back up. So it's probably gonna hit this box. It's gonna bounce back up. We're gonna see though. But this is what I'm saying. You try to predict what's gonna happen next, not off of just guessing random. No, like you gotta like understand why you're guessing that. Oh, it's because of this low got broken or this got broken. So I mean, we still might be right, but like I said, the idea was to add an additional position right here. So even if we weren't able to, it's still fine. We wouldn't have, because I would have added one up here. So we still didn't, it's like I said, we're still in the profits right here. Because our idea was to take the short from here. So that's down to, I might have been down to there again. Yeah, it's going to be down to there. So the idea would be to continue down now. And that was, like I said, after taking this short on the 5-minute fake out pretty much, and we could have even taken a better entry had we waited for this 5-minute to close right here. Sorry, Ryan, let me get back to your, what time frame does Don go off of? Ryan, Don goes off of all time frames. He uses all time frames. So right now I'm only using the 1-minute and 5-minute just because this is the only way we could get a lot of action real fast, because if I was waiting on the daily, I would have to wait a whole day for one candle, you know. So the idea is just, I'm just using the faster time frame so we could like see a lot of price action pretty much. But Don uses all time frames to make up his one trade. Like he doesn't add positions or anything. I'm just adding positions just to like test things out of like if I know what I'm talking about. Because if I know what I'm talking about, then I should know where to add a position at, you know. So that's where I'm working on right now. But yeah, the idea though is to use all time frames, because look at right now I'm on the 5-minute and you see that there's a support right here, right? And then I go to my 30-minute, which is this, it's just bigger time frame. You see how there's a support right here? There's a support on this one now. Not the same support, isn't on the same area. So look, the first one was here. Let's go back to the hourly. Or no, was it the 15? Or was it the 5? Oh yeah, it was the 5. Okay, so look at the 5-minute. This is on the 5-minute. And you see that there's a little support right here, right? And that's touching the line actually. So the idea would be that if you go to the, let's say the hourly now, look at where the next support is at. It's not till way up here. So that's also why we're getting, like we're having a little rejection and stuff right here because there's also higher time frame supports. Because like if I zoom out now, the first one is down here on the 5 minute, but like I say, the 5 minutes not as important as this is the hourly. So the hourly is a little bit more respected, which is also why we're getting this bounce right up at this level. So like I said, if I go to the 5 minute again, look at the top line is the hourly support. So you see this support right here, this is the hourly support. And then that's why we got that right there on the 5 minute though. Now this is the 5 minute again. So but yeah, all right. Yeah. So that's just the idea I got right now. Well, I'm just gonna leave this open for now, just to see what happens till later. But yeah. So that's actually kind of what I'm gonna get. That's actually I gotta go get some stuff done real quick. But yeah, I'm gonna be getting off right now. So appreciate you guys for watching. And Ryan, I'll probably be streaming again tomorrow, so I'll send you a link tomorrow. You can make sure you get on and stuff. And I'll probably be doing a real trade tomorrow, so we'll see what we do. All right. But yeah, I'll see you guys later on tomorrow. I'll be on again tomorrow. I appreciate you guys for watching. I appreciate you guys for donating and all that stuff. Appreciate it. You guys all take care, and I'll see you guys on the flip side. Peace.